Around April last year, I put a video out explaining my thoughts on the impact of COVID on the Australian property market. And at that time, there were a lot of risks and a lot of unknowns. Unemployment was increasing, people were putting mortgages on hold, everyone was in panic mode, and in general, things looked pretty dire. But 9 months on, we've kicked off a new year and things look different, which is what we're going to talk about in today's video. Hello guys, Brad here from The Guided Investor. Welcome back to the channel for another video. If you're new here, consider hitting that subscribe button because I post regular videos about how you can do more with your money. And today we are talking about the Australian property market. Heading into 2021, things are looking a lot different to what they were last year. We've largely wrapped our heads around the impact of the virus. We've somewhat adapted our lifestyle to be able to live with the virus. And there's also a vaccine being rolled out across the world, which gives us hope that one day we can live in a world that's virus-free, or at least COVID-19 free. Now, it may take longer than anticipated for that vaccine to sort of work and roll out, and there's a few risks involved there, but it does give us some hope. So what does this mean for the Australian property market and how are things shaping up in 2021? Well, the property market is actually already off to a pretty good start from the second half of last year. Now, overall, the market did drop by 2.1% between April and September last year. But overall, by the end of the year, most markets did make a gain. And you can see that in this little graph. So with the exception of Melbourne, every other state had a positive return for the year, which is a pretty good outcome considering what we were facing. Some of this rebound in property prices can be attributed to the stimulus that was pumped into the property market by governments. So this included the Home Builder Grant from the federal government, which is actually set to wind up on the 31st of March this year. And there were various other state-based incentives also to help support property prices. But in 2021, we're not likely to have this level of government support or stimulus. So does this mean that the property market's going to crash? Well, probably not. Provided unemployment remains relatively low and there are no left field type events, it's always the things that we don't see coming that impact us the most. But provided we don't have one of those in 2021, then I'm actually quite bullish on property prices for this year. And let me explain why. Interest rates are the lowest they have ever been, and there is no intention to increase interest rates anytime soon. So with interest rates so low, the amount of debt that people can service has increased, and this increases demand for property prices. In this market, it's actually quite hard to justify renting as opposed to buying. And the way I look at it is when you buy a property with a mortgage, you're actually renting off the bank. So for example, if you borrow $500,000 to purchase a property and your interest rate is 3%, your cost of borrowing is roughly $288 per week, which is essentially the amount of rent you're paying to the bank to have that property. I calculated this by taking $500,000, which is a loan amount, timesing it by 3%, which is the interest rate on the mortgage, and dividing it by 52 because there's 52 weeks in the year. Now, I don't know about where you live, but here in Perth, if you spent $288 per week, you'd probably be living in a shoebox in the middle of nowhere. But if you spent $500,000 on a house, you could probably get something pretty decent. And this is going to entice people to buy rather than rent. Now, there are obviously a lot of other factors that drive property prices, but for me, at the moment in this market, I do think that interest rates are going to be the primary driver. But it's always prudent to look at the risks, so let's do that now. Rising interest rates. An increase in interest rates would obviously put the squeeze on affordability of housing and push more people out of the market. This would cause a drop in demand, which would give you a subsequent drop in prices. Personally, I can't see interest rates rising until we start to get inflation, which the government is desperately trying for with no success. If we do get high levels of inflation, the Reserve Bank will raise interest rates to cool things off and bring inflation down again. A rising Australian dollar, this would mean less foreign investment, which would push down demand for property. A new strain of COVID. Although we have a vaccine being rolled out for COVID, there is a very real chance that a new strain can emerge that isn't covered by the vaccine. This is bad for the economy and property prices for obvious reasons. Less migration to Australia. With our borders closed, it's likely there will be less migration into the country. Migration helps to increase demand for property prices. From an investment perspective, there is an additional landlord risk due to COVID. Government policies were implemented to protect tenants when unemployment was high due to COVID by restricting evictions and rent increases. Although these were temporary measures, it does present a real risk to landlords. And finally, the unknown. It is always the unknown factors that can hurt us the most. So obviously there are some risks there to consider, but based on the information that we have today, I do actually think that it will be fairly smooth sailing for property prices in 2021. So does this mean that you should rush out and buy yourself a property? No. I believe that for most people, a good financial plan will involve the purchase of a property. And it should be your financial plan that drives the purchase and not speculation on property prices. Even if property prices were guaranteed to rise in 2021, that still doesn't mean that you're ready to buy a property. First of all, you need to have a deposit, you need to have a stable income, and you need to know how the purchase is going to fit into your overall wealth strategy. Because even in a rising market, if you over leverage yourself, that can blow up your financial position. So don't rush in based on speculation, be smart about it, and always work out what your financial plan is first. But that's it for me today, guys. Thanks a lot for watching this video. If you did like it, please give it a thumbs up, and I will see you guys in the next one.